Why don't we start with what's working? Comm services, the best performing sector this year, followed very closely by tech. Those two sectors, I should say, have a lot of the big name stocks in the Mag 7 we've been talking a lot about. Do you see those sectors continuing their outperformance next year?
So let's have a look at what, as you say, what worked last year, just as a bit of a recap as we go into the end of the year. You had the technology stocks that really did work this year. And then you also have what we call the picks and shovels, and that is the utilities sector. So, things like a GE Vonovia, which was a very strong performer, providing the power that is needed to power all this AI technology. So I think that you've had both of them. But as we look going forward, one of the areas that we think is a secular theme, and we do think it's going to continue to work in 2025, is AI and the technology sector. And we're very bullish on that in terms of the ability of that sector to continue to perform.
Are you worried at all about valuations? We talk about the market being highly valued, the S&P trading about 22 times. The stocks in those two sectors, I'm talking tech and comm services, trading at very lofty valuations above the S&P. Is that a concern as we go into the new year? Because we've seen the market kind of have some weakness in recent days. A lot of people started whispering maybe the market's starting to get religion when it comes to valuation.
Valuation has never been a reason to sell something. You need to unpack what it means. First of all, we think that the valuation reflects a number of things that the market is getting right. The first thing is that the earnings growth of these companies, and most of the companies in the technology sector, they have positive earnings, which is very different from the internet bubble. The second part, which we believe is a driver of those strong, higher valuations, is the fact that network effects is a big part of what is driving returns to the biggest players. And so I think that you have a good rationale. And one of the ways that multiples do get cheaper is that if companies grow their earnings and grow those earnings faster than expected. And that is the camp that we're coming into, that the market is underestimating the ability of these companies to grow. The risk, and we obviously need to be cognizant of what could go wrong, is that when you're looking at companies to deliver on earnings growth, there is a risk of misexecution. And that's very difficult to kind of predict in advance, but it's something that you need to be wary of. As you said, given some of the higher levels of valuation, these companies do need to perform and deliver on earnings growth.
All right, so not a reason to sell, but certainly something to watch when we're talking about valuation. I want to go to the other side of the coin, the laggards, specifically materials, a cyclical sector a lot of people thought would benefit from rate cuts, and then also healthcare. I know you're seeing a lot of upside in healthcare. I've heard some other people say just the simple fact that healthcare has lagged so much, and just based on the demographics of the United States, the aging of our population, that these stocks have a lot of upside. But is there something else outside of that? Because why wouldn't they rally this year if those were tailwinds and factors that were important to investors?
Healthcare is such a diversified sector in and of itself. And so some of the names that have performed very poorly during 2024 are some of the healthcare services names, which were suffered from rising medical costs, and those costs being higher than they anticipated, as well as some consumer backlash against high pricing. Also, a lot of effort within the new administration is going to focus on transparency. And whenever we talk about transparency, you think of what happened in the last couple of decades, particularly in the last 10 years, we've gotten transparency into markets and prices tend to adjust, particularly for those areas of the market where you're making outsized profits. Transparency is good for the consumer. It's not necessarily good for those companies that are out earning. So that's the services side. But then let's talk about pharma, and I think that's the one area where we think is a very interesting area from a secular perspective, and that is that intersection of healthcare, which is going to be driven by good demographics on a secular basis, as well as artificial intelligence. And if you have a look, some of the AI technology in the research space is making our researchers more productive and having them hit more targets. And we think that that drives the productivity of those pharma companies. And even though you may not see those benefits tomorrow, we think in terms of longer term, higher productivity, better demographics, it's a great place to be.